What's up everyone, my name is Michael and welcome to Boxmining. Today I'm going to talk about Spectre, which is an exchange for speculative tokenized trading. I'm going to talk about what the whole concept is about and a potential use case for it. I'm going to compare it to prediction markets. This is a concept that I've been asked before. I'm going to take you through the alpha as well of what they built so far. And of course, I'm going to talk about the roadmap and team as well. And finally, leading on to the token sale. I do want to say that this is a sponsored post, but I've reserved the right to give my personal opinion, including the advantages and disadvantages. I do want to say that with every single token sale, it's important to look through and do your own due diligence, and this is not financial advice. So let's start off with what is Spectre and what is this speculative tokenized trading. The best way to describe it is to take you through their alpha right now. So I dabbled a little bit into speculative trading in the past, and one clear example was when UK wanted to exit. So when Britain wanted to exit the European Union, known as Brexit. So right before Brexit, the day before, there's a lot of speculation as to the price of the Great British Pound, or GBP, and what's going to happen relative to the US dollar. So there was a lot of kind of speculation in the air. People were making a hypothesis that, oh, Britain is going to Brexit or not going to Brexit, and there were these various outcomes. So if you're very, very certain of, and you think that a particular outcome is going to come out, then you can kind of place a bet on it on this kind of smart trading platform. So let's take a look at what you can do. So you can switch to USD, and then you can make your bet. You think, all right, is Britain going to Brexit? Oh, if it's going to Brexit, it might go down. So you can click the little down button and you can set the criteria for this. So expiration 1 day. So yeah, this is when you're going to evaluate if it went up or down. I do have to say that right now I'm testing this out when the markets are closed, so I don't get the OK confirmation button. So what would happen is if I did place this kind of trade, then what's going to happen is that in 1 day it's going to evaluate if the GBP went up or down relative to USD. So that's the trading pair I have there. And if it went down, which is the one I placed, then I'm going to get my money back plus 78%. So I'm going to make a little bit of gain, quite a lot of gain actually, 78. But the reverse is also true. The reverse is that if it goes up and I lose, then I'm going to lose everything. So I'm going to lose whatever I place down there. So my kind of size is all lost. My Ethereum kind of bet is lost. And this kind of trading, this is kind of smart contract trading that is quite popular nowadays when people want to take a bet on a real world assets, real world trading pairs, and they think it's going to go in a certain direction. You can also change the expiry time. So you can change it to 5 minutes if you wanted to, and you have a very big hunch that in the next 5 minutes it's going to go down or it's going to go up. So when you can actually shrink that time to 5 minutes, 10 minutes, an hour, a day, and potentially 5 days in the future on this platform. The idea is that you can have this fast reward if you want, if you have a very strong hunch. And of course, this is pure speculation. That's where the speculation part of Spectre comes in. So how does the system work? So when you're actually making that trade, you're actually betting against the house. So they don't have to match you against someone else. This is very different from prediction markets where it's all player versus player. You have to be matched against someone else, and that's where the results come in. Here you can bet against the house. You can say you can choose anything and you don't need the liquidity there because they already have something called a liquidity pool. So that means you can do anything you want, and if you lose, the liquidity pool gains money that takes it, and the reverse is true. The house can give it to you. So that's the liquidity pool up here, and this is something that they're trying to build to as well. Right now it's in testing phase, so they have a large number here, but they're going to start off with around $2 million for the liquidity pool at the start. The thing is, now that I talked about the pool, I do want to say that there are fees associated to this. So like I just showed you just now, you don't get 100% back if you win, but you do lose 100% if you lose. So that's kind of the difference, and that's where the platform makes its gains. So the pool can make its gains by having that little bit of difference. And of course, there's trading fees involved in each trade as well. And that trade results in the fees for both the company and also token holders as well. And this is something I'm going to cover in a second. that was just the alpha of the product. Eventually, they want to expand to CFDs. They want to add other options like stocks, etc. So if you feel like, oh, price is gonna go up after the release of the iPhone 10, well, that's possible, and you can place that trade as well. So these are the use cases. It wants to expand to other assets, and it wants to do this in real time. And the difference between this and something like prediction markets is that prediction markets aren't linked to real world assets, and in prediction markets you must be matched with some other people that want to do this trade as well. So liquidity is not very high here, but here there's always liquidity when there's a pool in the liquidity pool that's provided by Spectre. The thing is, you don't have to play against someone, you can play against the house in this case. But the thing is, the difference, of course, with prediction markets is that you can predict anything. So you can predict the weather, election results. But here you're more tied to assets that have a real-time feed, like your stocks, like your Forex, or even your crypto. So that's the kind of difference between these speculative trading CFDs and, of course, your prediction markets. So now the question is this: why would you use Spectre over other traditional services that already provide this, your FX brokers, your digital option brokers, and your exchanges? Well, the result is that Spectre is decentralized. It uses smart contracts rather than having a centralized party. This is a huge difference to how traditionally things work, because in traditional systems, there is always one central party. You deposit your money to the central party and you have to trust them with everything, including their data feeds and including the fact that maybe you have your assets there and potentially there might be withdrawal issues. This is a big thing that we've seen with exchanges, and it does happen with CFD brokers as well. So here, being decentralized is more transparent and everything's done by automated smart contracts. So there's no real room for someone to manipulate and be very opaque about things. Another thing to point out is that with a centralized service, there's always a conflict of interest between the broker and the trader. The thing is, the broker wins when the trader loses. So now there's an incentive to kind of make and manipulate things so the trader loses. In this case, with a decentralized service, because everything is automated, it's more transparent, and hence you're less vulnerable to potential manipulations such as kind of tweaking the live data feed. So what's the roadmap for this project? Well, right now they do have the alpha set up. So I've shown you the alpha and the kind of UI for it. The thing is, the alpha is not working right now. It's not working with the smart contracts. So that's where the beta comes in. That's where they're trying to do in the end of this year. So near December, they want to deploy a beta, but that's not fully trading yet. To make sure everything is fully trading, they probably want to launch that in the next quarter of next year. So it does take a little bit of time to get everything developed. I do want to say that it's very, very hard to verify the readiness of their back end and how they can use their smart contracts, because right now that's not ready for testing. But so far, in terms of the alpha, the UI does look clean and it looks like it's ready to use. So the options and even the kind of trading habits are there. So hopefully that can be turned into an actual product next year. So at this roadmap as well, I do want to say that they need to acquire some licenses as well. So they kind of want to do that near the second quarter of next year. So they want to apply for all these licenses to be able to become something that can create and be an operating exchange that's legal. In terms of the team, their CEO is an ex-banker, so they have the knowledge with the trading experience to handle the basic concept of the platform. And the CTO has quite a lot of experience in this industry. The team is around 10 people right now based in the UK, and they've been kind of working on this project for around a year, starting from the final quarter of last year. So I'm going to talk a little bit about what I think about this project and the details of the token sale. So what do I think about this? Well, I've touched about this in the past. I've done speculative trading in the past. I do want to say as well that this market is huge. The exchange that I was using, plus 500, brought home $328 million worth of revenue last year. The thing is, speculative trading is extremely risky, but at the same time, it's a hell of a lot of fun. So I do understand why people would do use speculative trading, and there are companies out there that use it. There's also books on speculative trading, and there are books about CFDs as well. So if you guys want to read that, it is there. So the concept is very interesting, and of course, having it decentralized is good. We all know that central authorities, and especially when there's a conflict of interest here, that's never a good thing. So having a decentralized version of that means that the traders can trust this more. The thing is, of course, there are some disadvantages to having a decentralized exchange. One of them is that they have to use cryptocurrencies, and you might limit the market, because right now the market of people who are using this might not be very knowledgeable about cryptocurrencies. But of course, that might change over time as crypto gets more popular, which is what we're seeing now. Another potential disadvantage over traditional systems is that traditional systems have a lot of incentives. They have a lot of promo codes. They have a lot of these ongoing weekly promotions where you can claim credit. And it's harder for a decentralized system to issue out things like this. But that said, the trust issue is huge in this space, and having a decentralized exchange that is decentralized and you can keep your funds yourself and not surrender your funds, and B, having a live feed that's not tweaked and have tools to have better trade margins does give this platform a very significant advantage over traditional services. So it is going to be a competition with traditional services. I do want to talk a little bit about the project completeness as well. They do have an alpha, and the UI looks okay and pretty usable. The thing is, of course, we can't evaluate the back end right now, so we have to wait until the beta and potentially even the product launch to verify that their smart contract works. In terms of their token sale, right now they're selling their tokens and they're offering a pre-sale bonus. The thing is, you do want to realize that the tokens, there's going to be two types of tokens too. This is one of the only ICO projects that have two types of tokens. The thing is, you don't have to decide immediately which token you want. So when you participate in a token sale, you get a generic token that gets converted into either a D token or a U token in the future. So I'm going to cover this very quickly, but there's comparison tables and stuff if you want to do further research. The key thing to remember is that one of the tokens, the D token, behaves very much similar to a security. So you get dividend payouts, but the problem is because it behaves like a security, there's going to be low liquidity because some markets don't want these security type tokens. So that might be one of the potential issues with the D token. There's another token called the U token, the utility token. So the utility token is to get you the best trade and to be used on the platform for, guess what, utility. So it helps you on the platform, but it's not going to be the dividend collecting type. The thing is, with utility tokens, they can be readily traded and they can be listed on more crypto exchanges, and hence they have higher liquidity. The thing is, of course, there are disadvantages. There's no dividends and yield protection. So I do want you guys to draw attention to the fact that there are both two types of tokens, and you get to eventually choose one, or you can choose both at the end, and you can choose which percentage of what you want. So this is very important, but you do want to take a look at this sheet. I'm going to link the sheet down below. So that's what I think about Spectre. I've gave you some of the use cases, and I talked about some advantages and disadvantages. I would love to hear what you guys think about this project as well. Have you guys played around with contracts with differences in the past? Have you used binary options before? Are they fun? And do you feel excited with them? I'd love to hear what you guys think about this project and this form of trading as well. Thank you guys so much for watching this video. Remember to subscribe to my channel by clicking that subscribe button, and of course, hit that notification bell to be notified of new videos. Thank you guys so much for watching. See you next time.